Now, to begin our first session, we are pleased to invite Mr. Dedi Iskandar from CBRE to present on Malaysia Data Center Trends and Investments. Mr. Dedi will provide an overview of Malaysia's data center market and highlight key opportunities, challenges, and emerging industry trends. Please give him a warm welcome.
Good morning. Nice to meet all of you. A very exciting moment right now in Malaysia, and especially in Johor, in the place where you are currently, I would say, looking at right now, especially in the data center areas. And my name is Dedi Iskandar. I'm the head of data center solutions for Asia Pacific in CBRE. CBRE is a property management firm where we provide consultancies, facilitations, brokerage, facilities and operations of data centers. In Asia Pacific, we are about 400 people. In fact, we are actually one of the largest employer of data centers in Asia Pacific. So today I'm going to share with you about data centers industry trends that we have in the industries globally, and as well as what happens in Malaysia market. To start off, let me share with you about the demand drivers of data centers. So the data centers has been evolved. It's not just as the data backup solutions, but it's also one of the key important factors for the economy and as well as the life-being of the companies worldwide. The two demand drivers in the past, we have multiple demand drivers such as the big data, IoT, data generation and storage, which is the legacies of what a data center is. But today is all about cloud computing and artificial intelligence. These are the two primary demand drivers that is filling the activities, the craze that we have right now in Johor Bahru. As you perhaps understand that applications that we use daily, everybody do not have a phones today? No? If you have a phones, if you have a computers, you are contributing to the usage of the data, right? So from the TikTok, from the Netflix, using the e-commerce platforms, even the car are using the data. And because of it, the volume of the data created and consumed worldwide has been increased. So just in 2010 and projected to 2025, the expected data growth is roughly about 90 times more. You can imagine, 10 years ago, 2010s, everybody is still using Microsoft Office and so on. Right now, everything that we do is all on phones, all on the computers, everybody use data. And because of it, it has a 35% CAGR growth from 2010 to 2025. There are a couple of events that trigger these consumptions of the data. One is the social networks. I think everyone remember Friendsters? Anyone remember Friendsters? I think that's the first social media application that perhaps is, if people on that age, they probably still remember that Friendsters. And then there's a smartphone consolidations when the iPhone start to become more worldwide available. And then we have a COVID-19 pandemics. But more of that, there are 5G deployment everywhere around the world. And right now, the latest trend is the cloud computing and AI. So this is a very interesting chart. The cloud computing and the AI market size is going to surpass 2,000 billion US dollars, and just by 2030. So that's just 6 years from now. So just 6 years from now, we are at the September 2024. In 2030, it's a 14% CAGR, which is why everybody's coming in to these regions. BlackRock, KKR, even some of the sovereign wealth funds, GICs, the Nordi, which is the Norway sovereign wealth. Even the pension funds from Ontario, from Canada pension fund, they all come. Because these are the next growth engines that will fulfill the economy and as well as the industry itself. 14% CAGR. In the baselines, the cloud computing segments is forecasted to grow to about 1,000 billion, and that is the 8 times since 2016. The largest growth is actually in the infrastructure as a service. So if everyone familiar with the Amazon Web Services, Azure, those are the infrastructure as a service. And then there is also a platform as a service, software as a service, business as a service, and a desktop as a service. These are the key components from the cloud that propel the growth of the cloud computing's usage. 8 times our cloud growth from 2016 to 2030. But this is the other one important point. Okay, AI. AI has been becoming a hot topic, right? And in 2020, the AI started to see the growth in the market. This is the global number, just to give, I would say, understanding. The AI is going to actually grow even faster than the cloud computing. The cloud computing growth about 8 times from 2016 to 2030. AI is going to grow 7 times, just from 2020 to 2030. So it's just a 10 years growth. Right. Who propelled that investment? It is the machine learning, which is the 8 times of increment, autonomous, and a sensor technology. So this morning I see there's a Tesla's parking slots just in the beside of this building, and that's also using the sensors, right? Natural language processing. So this is where when you say to ChatGPT, please tell me what is the weather today, right? How the weather will grow. Is it going to be raining? When is the rain going to stop? So this is the natural language processing. AI robotics, this is where the replacement of the humans into a robot. So it's not like humanoid robots that what we see. Robotics can be in multiple, I would say, platforms, just not necessarily in the humanoid forms. And then the last is the computer visions. And who or what is the key important components towards all of this growth? The key important components is actually data centers. So when everybody moved from data centers to cloud computing in the past, which is from 2011, 2012, I think this is when the bank started to say that they need some, I would say, backups, and the backups go into the clouds. And that's where after the banking and financial institutions, everybody goes to the cloud. But the cloud need to be hosted somewhere, right? It used to be just hosted in some data centers very near to the office. Well, data center has grown tremendously since then. We have hyperscale data centers. We have the regional data centers. We have an edge data centers. And we even have the personalized data centers, right? Your phone is one of the personalized data centers. It stores all your data. It performs the AI computations on the spots, right? Edge data centers is very unique, where it's usually hosted very near to where the data is going to be processed. So one of the examples is in China. In China, edge data center is located in the gas stations. Can you imagine? In the gas stations. So all the computings, all the necessaries, calculations of when is the gasolines, what is the quantity of the gasoline is still in place, when do they need to top up, who's going to trigger is going to be top up. It has been changed from a manual activities into automatic activities. This is all done by the edge data centers in the gas stations. Right. Regional data centers is where you put the data centers in the city. So in the cities, data centers are built normally in the area where it's quite further away from the residentials. And then after that, we have what we call the giant data centers. When I say giant, it's really giant, right? Especially in Malaysia, you will see that some part of Johor, if you take a look at Sedanak, or if you take a look at the YTL Tech Parks, it's all full of whites. What is whites? All the whites are basically the roof of a data centers, right? And it's a huge plain of land in the middle of deserts, and that's where the data center is. So these are the gigantics, the core, and the large data centers away from the city centers and require the big amount of power. So in the futures, there will be even more changes in terms of data centers. Right. Right in the left side, this is where the current data centers are being designed. Right. We have hyperscale data centers, we have a regional, and we have edge data centers. In terms of services, it provides infrastructures, it provides a platform as a service, and it also provides a business and a desktop as a service. It is usually divided by having a multiple traditional servers, and it has the traditional air cooling, cooling mechanisms to cool the hot servers in the data centers, right? The density is where the space between the racks. The racks is basically where the data centers servers are being hosted. The densities is between 1 to 15 kilowatts per rack. It is currently one of the hottest in the market demands. And in terms of the commercialization strategy, it is very tenant-driven and speculative in nature. Why? Because cloud computing behave in the just-in-time capacity. Just-in-time capacities is where the capacities, when it's needed, it has to be there in real time. So it's just in time, right? But in the futures, there will be another factions of a data center design, and this is a data centers for AI. It's a totally different beast. It's not even similar to a cloud computing's designs. It has been designed ground up just for an AI usage. One of the differentiation is where in traditional data center, we have hyperscale, regional, and edge. In the AI, we only have two, which is either they are learning data center or they are the inference data centers. Inference is basically what you see as the upfront applications. The learning is when all the learnings, when you send ChatGPT's inquiries, the inquiries will go to their learning data centers. It will be processed by their learning servers, and it will be passed over to inference servers. The biggest significant difference is basically where the densities. The densities for AIs are actually much larger as compared to traditional data centers for cloud computing. We are talking about 40 kilowatts of racks. We're talking, and some of the vendors, they are asking for 120 kilowatts per rack. What does that mean? It means the servers are getting heavier. The servers are getting heavier, the server is getting hotter. And especially if we are in the climate countries like Malaysia, this become a challenge. It's also become an opportunity. So two things that become unique in the AI data centers. One, because it's getting heavier, majority of the design is going to be horizontals because it's heavy. So if you do a vertical data centers, which is basically ground up multiple floor, it doesn't work for AI because the servers are very heavy, very, very heavy. The second thing is the usage of water, right? So in the AI data centers, they require a good quality water, so what we call it the pure water solutions, right? It's used to cool the servers. So the consumption of water will increase exponentially for an AI data centers. In Taiwan, the AI data centers are currently competing with the chip manufacturings because both of them actually require the same amount of water. So it's becoming a game of thrones between the chip manufacturing company as compared to an AI data center company. So the most popular applications in the AI is what we call GPU as a service. The GPU as a service growth has just begun, right? The GPU as a service is used as the engines for the AI LLM language processings, and as well as to provides I would say processings for other areas of AI. It used for accelerates the compute intensive tasks, machine learning, scientific simulations, and data analytics. There are two types of GPU deployments. One is the on-premise GPU, and the other one is the GPU as a service. So this is the primary, currently in Asia Pacific, this is the primary implementation of AI. So who is playing on it now? Multiple operators and the cloud players are building or upgrading their capabilities in the space. We're talking about Amazon Web Service, Google Cloud, Azure, in Ali Cloud. These are the top 5 cloud companies that not shifting away, but they created a new type of services which is actually being used to support the AI demand. Some of the operators are focusing on providing the GPU as a service directly into their data centers. So the likes of Singtel, Equinix, there are many more who are providing these services. So it's not just the cloud company, but it's data center companies are also trying to provide this service. Now, after we understand what's happening in the global, let's see what happens in Asia Pacific. I was told this morning that this event, there's a lot of investors, so a lot of financials, I would say investors. So in a couple of slides, we'll talk about investment. So in these slides, we talk about what's happened in Asia Pacific. There are tier 1 markets and there are tier 2 markets. So in the tier 1 markets, we've seen things are growing, but not what we call it fantastic. It's not fantastic. It's still growing, especially in the Japan, because Japan still have a lot of lands, it's ample power, good connectivity. It's still growing. In fact, it's one of the fastest growing markets in Asia Pacific, which is surprising for an economy that is already there and been dormant for the last 10 years. It's a very surprising. But what happened with Hong Kong and Singapore? Not too much of a growth. In fact, actually Hong Kong there's a very little growth at the moment. Singapore, the neighbor of Malaysia, has been growing in the very, very mild segments. And then Australia is also another growing market. But look at the growth in the tier 2 markets. The tier 2 markets, India, is actually growing so much larger. How do you see that, how it grows, and how do you know that the growth is actually exponentially? as when you take a look at the current supply and the current pipelines. So India, being a very gigantic domestic market, it grew for 490 megawatt on the current supply with a pipeline of 1,213 megawatts. What does it mean? It means there's a confidence from the investors that they will build a data center facilities to provide a supply to these domestic markets. China, being already grown 3.6 gigawatts, they are still growing, but they are growing smaller, 1.2 gigawatts more. Malaysia, in particular, is a very interesting. So this chart is actually built. Apologize. This chart was built in April, but from April to September, they are more growing in these Malaysia markets. But Malaysia market is one of the highest growth, 383% growth. The current supply that is provided in Malaysia is not enough. And that's why a lot of companies are building new data center capacity in Malaysia. But don't forget, the other neighbors are not stand still. The other neighbor, like in Thailand, Thailand has a very under supply in terms of data center capacities. And the pipeline that they have, it makes them grow 500%. It's still small, it's just a 200 megawatts, but it's growing at a faster rate, and so on and so forth. So why the market drivers to the tier 2 markets? One is the power. Being in the tier 2 market, being in the tier 1 markets, the power becoming a constraint, especially in Singapore, is one of the most constrained power countries. In other tier 1 market, it's a higher cost because of their labor. It's also the higher cost in terms of the land. And for the tier 2 markets, it's a very attractive and it's a biggest opportunity for growth. Because one is the land is affordable, the power is also plenty, water are plenty, and it's also built with the connectivity. Having said that, we need to take a look at the economy in the broader level. Data center is just one of the industry that we have the privilege that these industries are booming. But in general, because of the policy interest rates, real estate as the investments has not really doing great, right? The policy rates has been quite, I would say, stable, and what we've seen is that we are witnessing fewer than expected rate cuts. And I think the US policy rate is one of the major triggers for this. The higher interest rates and the prolonged uncertainty about rates cut timing, it weighted a lot in terms of the investment volumes. As you can see, that the investment volumes in China is minus 15% in terms of the year-on-year growth. However, we still have other countries which is still growing in a healthy level. In the data center in particular, there are a few areas of preference from the investors. The first preference that the investor would like to do is to perform the hyperscales build-to-suits. What does that mean? Hyperscale build-to-suits is where you build one facility and it's just for one single client. And once you build, and then you hand it over to these clients. That's it. That's the fastest and the easiest. It's very bankable in terms of getting the loans. It's one of the most preferred options for investors. Another more exciting is when you purchase an operating platform or you contribute an equity investment into an operating platform. There are many operating platforms that is already public listed. So this is where you can actually acquire their entities or acquire the business using the stock exchange, but there are also more of this platform which is privately owned. And this is the areas where the private investors usually will try to acquire. Another more exciting is when we do perform recapitalizations of existing projects. So in the startups, this is what we hear about Series A, Series B, Series C. So this is very similar. You perform a recapitalizations on the project level. You perform a project financings on the project level. The rest is the traditional real estate. You purchase a one-off property, or you perform a debt financings and the portfolio of the property purchase, which means you have multiple of these assets that you buy in one go. Now, this is what happened in Malaysia, which is even more exciting. Let's start with the microeconomy level. I'm focusing on the two major areas here, which is Johor and Kuala Lumpur. Malaysia is a vibrant Southeast Asian nation. It has the well-developed infrastructures. It has been a diversified market. It has a very strong government focus, and this is a very important factor for data centers. Data centers is a very capex heavy. When it's capex heavy, investor needs to be confident about the country, about the government. The government here being, so I lead the data center divisions for CBRE in Asia Pacific. I've been helping multiple governments all around the world in the Asia Pacific in terms of how do you lay the red carpets for data center investment. And I can vouch that Malaysia government is one of the frontier who really perform a good job in terms of providing a red carpets for data center investors. That's effort has already been done since 2021. I think it requires a very good foresight to see what's happening in the future, and the Malaysia government has been proactively courting all of these companies to come over to Malaysia. So Malaysia's surge in the data center demand is driven by the confluence of digital transformations. There are three triggers here. One is the heightened data consumptions, which is very unique. Malaysia data consumptions during the pandemics is 15 to 30% increase. And that's actually go beyond the traditional peers. Maybe more people actually consumes mobile since they are all in their homes, not doing anything, so they basically watch Netflix, or they basically perform a lot of mobile. A lot of people are using Zooms or Microsoft Teams. But Malaysian customers actually use more data during the pandemic. Malaysia's internet penetrations is 97.4%. And this is the number from OpenSignal. It's even growing, it's even higher than Singapore. So definitely the Malaysia is doing a good job. There's also an accelerated cloud adoptions. Just now remember, the cloud adoptions globally is increased by CAGR of 14%. Malaysia cloud markets grow 13%, not far away from the growth of the worldwide. Malaysian's enterprise clouds estimates that 48% of total application portfolio has been migrated to a public cloud. And then it has a plan to migrate up to 64% in the next 2 years. And surprisingly, the awareness of AI in Malaysia is also one of the highest in Asia Pacific. Malaysia has been the early mover to identify and to move and to court the AI companies to invest in Malaysia. And one of the largest, I would say, news was about the YTL, and the global AI chip manufacturers, NVIDIA, are going to announce 4.3 billion investments in Malaysia. In terms of the naval infrastructures, Malaysia have one of the most sophisticated connectivities, sufficient connectivities to connect Malaysia into a broader areas of the world. So there are big connectivity hubs in Penang, Mersing, Malacca, and there are more connectivity hubs. In this case, it's cable landing stations. There's going to be built either by private consortiums or government-led consortiums. You can imagine that this number of cable stations compared to Vietnam. So Malaysia has roughly about 7. Vietnam only have 3. That's how contrast the development is. Tenaga Nasional Berhad is also spearheading the country's smart grid initiative, and this is one of the also key components of why Malaysia is the prime destination for data centers. Power is half of the revenues of a data center, and having a proper power infrastructures and a power grid infrastructures is very, very important. Okay. Malaysians, unfortunately, because of the source of power, are still relying a lot on the coal-based fuel. However, they are more pushed to be less reliant on the fuel and on the renewable energy options. The cost of the data center in Malaysia is also lower in Singapore. And if you take a look at Kuala Lumpur and Johor, Kuala Lumpur is almost similar to Seoul, and Johor is even cheaper than Melbourne. The market in Malaysia are growing very rapidly, and it will be grow even further. There are total upcoming, look at the Johor market, is currently at 154 megawatts, but the upcoming and the planned capacity is 2 gigawatt. It's 2 gigawatt. This is very clear that the capacity is not going to be for just this market, but it's going to be the global hub for Asia Pacific. There are more of all these slides which we can share with you, but just to take a look at the supply and demand, it's a very healthy supply and demand currently. In Kuala Lumpur, majority of the clusters are in the Cyberjaya and the Negeri Sembilan. In Kuala Lumpur, the local data centers company are still providing the major players in the industries. However, some of the foreign companies are also trying to come into this market. In Johor, Nusa Jaya is where majority of the clusters are located. The Sedenak Tech Park is the other one. GDS, one of the largest data center company in China, is currently operating and having the largest capacities in Johor market. To wrap up my presentations, these are also a few other partnerships and the corporations and announcements that the global organizations has committed to make Malaysia as one of the key investment destinations. Thank you so much. And right now, we are open for any Q&A from the participants. Oh, there's already a Q&A. Thank you so much. Okay.
Mr. Dedi, as we're mindful of the time, maybe we can just take one question before we end. Thank you.
Yep. How long does a hyperscaler commit to build to such data center? Is there any risk of them terminating commitment to the building? So this is a very interesting question. Data centers require a capex-heavy investments, and thus the operators also require a longer commitment from their tenants, which in this case, the tenant is going to take the capacity on the building. The hyperscalers average contracts actually from 10 years onwards. So that's the average hyperscalers contracts. So which means if they sign the deal with you today, they will be staying with you in the next 10 years. Right? That's a very, very long commitment from computing perspective, because computing actually changes every 2 or 3 years, but the hyperscalers commitment is roughly about 10 years onwards. And some of them, they actually perform 10 plus 10 plus 10, which means that they potentially will be staying there for the next 30 years in your facilities. So this is one of the reasons why the banks like to take the loans for this type of client, because it's a very stable client. The chances for them to terminate the agreement or the contracts, it's actually very, very low. The only time when the hyperscalers will terminate the contracts, in fact, I think they don't need to terminate the contracts. One of the biggest risks for data centers is when you have a downtime. That's the biggest risk when you have a data center. A single downtime will make data center bankrupt, because the contract is made in such a way that the service level agreements, commitment from the operators to their clients is very high. It's 99.999 or 99.982%, which means that the service cannot down for just a few hours or a few minutes. The moment that the service is down for a few hours, the data center operator, if they are not big enough, majority of the penalties are in $1 million US. So that's why they may not need to even get out. Usually what happens is that there will be some kind of amicably understanding in terms of if there is a downtime, there will be a negotiations, but usually the data center operator will try to make sure that there's no downtime for data center. Thank you.
Thank you, Mr. Dedi, for the insightful presentation.